What's up, everybody? This is Miloni Kamdar with Real Life Trading India. Today, we're going to be talking about how to spot the perfect trap. Um, for those of you that are new to this trap scenario, that do not understand it very well, and oftentimes you, let's say, go long something and it does this, that's when you enter your trade and then it just collapses. So you're thinking, oh, it's going to continue to go higher, go make new higher highs, and it doesn't do that. Same exact scenario for the bears. Just as it makes that low, you enter the trade and it just goes higher. I'm sure all of us here have at least been there once. This is prime example, by the way, for the bulls getting trapped. And I spotted that very early on and got a cool trade in. So, all right, let's get this started. Type in a 1 if you guys know what imbalances are on a candle. Okay, I do not see anyone so far. Imbalances, yep. Type in a 1 if you know what an imbalance of a candle is. Okay, I don't see anybody responding yet. So what I'm going to do is show you guys what a perfect imbalance is. This is obviously the big massive drop that we had today on this candle. Now from here off this candle to down here, there's nothing in between. This, my friends, is called an imbalance. So for example, if you can find a big bear candle, so right over here, so from here to maybe the high of this candle, the area in the middle is called an imbalance. Now, this will come into play once we get talking. I want you to imagine this day, the way it's playing out right now. This is obviously an anomaly. This is an exception to the rule. Not all days look like this. Today is the CPI number day, and we got some bad news, and so we're just collapsing on the day. However, if we have a trend continuation, for example, on the hourly chart, these are the cues. Let's say this is a trend continuation. Right over here at some point, or maybe around here at some point, the bears are seeming a little bit tired. The bulls are stepping in. The market makers are having a hard time moving prices along. Here's a good example. The bears seem a little bit tired. The bulls are not stepping in as much. And the price just goes kind of sort of sideways, doesn't really make big moves that the market makers want. Okay, cool. In that scenario, who do you think is putting their stops up over here? Right over here. So the trend has been bearish, and I want you to type it in. Who do you think is putting their stops right up above all of this chop? All right. Joe says bears. Yes, shorts. So these are buy stops, okay? But you got to keep in mind, our trend is majorly bearish, okay? This is literally the market makers trying to find new shorts up here. This is where smart money steps in, not down here, not over here. This is where smart money is stepping in. All right, we have all of the shorts getting taken out. We go make that higher high. Everybody thinks, oh my God, the bulls are stepping in right over here. There's a reason why this candle is a pretty big darn candle, because we took out this level. Looks like we made a lower low. We're going high. Up again. Great. Fantastic. However, this level does not hold. Smart money is stepping in. The larger institutions are stepping in and keeping up with the trend at this point. When this candle comes in and we take out all of this buying and this low, you know this was a trap. That's when you know this is a trap. Write it down if you have to, or if you must. In order for us to continue lower on an extremely extended trend, we need to go make higher highs. Again, in order for us to continue lower in an extremely tired bear trend, we need to go make higher highs. So here, we make that higher high comparatively from here, and then we come back down. Well, you might say, well, I missed this move. How do I know? That's when you go into this candle, go on shorter time frames, maybe the 15-minute, maybe the 5-minute, whichever one you're comfortable with. And in my opinion, honestly, I like the 15-minute time frame a lot more than any other smaller time frames. So you go to the 15-minute time frame, you find an entry somewhere within the retest of this candle. Here, this candle gave us a very small retest, but I would surely, confidently be able to short this trade all the way down to a new low. This may scare you and kind of sort of get you out of it, but here's our new low. Here's our target. This is exactly how one must trade. And spot traps, again, let's go look at this. So now you understand this idea, right? And let's say you're not a very patient trader. For those of you that know me, I like quick, swift trades on the 1-minute, 3-minute charts if I'm day trading or scalping specifically. Well, how do you scalp with something like this that you know? Let's look at the 1-minute chart today. All right, let's zoom in and find our guy. Okay, here we go. Looks like a perfect, this is a 1-minute chart at 8:30. Wait a minute, that doesn't look right, but okay, cool. This is a 1-minute chart right over here. And here we have this higher high. This trend obviously is extremely tired to anyone that's sitting there going, oh, this is an inverse head and shoulders. This is just a retest of that neckline. We make that higher high. When we get rejected off of this green candle, when we take this green candle out, you bet I'm entering this trade with a stop over here and a target at the new low. Sometimes we get, let's look at the 3-minute chart. Sometimes we get deeper retracements. You have to understand that no one's buying. The candles are getting significantly smaller. All the bulls that are trying get trapped all the times. No one's really getting in. No one's really shorting either. What does the market maker do then? He either hunts for stops or looks for imbalances. Here is an imbalance right over here. Ideally, the market makers will move the price right up above over there and then trap all the bulls thinking, oh, it's going to go higher, and then continue to roll back down. Today, when I got my short, I knew we were making higher highs. It looked like a trend line that could certainly break. It looked like a perfect bear flag, actually, honestly. When we made this higher high, I was watching for this level very, very closely. This is where imbalances get in play. So here's our imbalance. Sometimes the market maker will hunt for stops. So here's our stops. All the bears have positioned their stops somewhere over here or a little bit higher. We get this trapping candle, bulls step in, and then immediate rejection. This, my friends, is a perfect trap. Now, I want you to think about this. I want you to think about this scenario. Here's our low, and here is our entry right over here at this point. Let's put our short position on and think of the risk to reward scenario in this case. This is obviously a quick scalp. So as soon as we make the new low, probably with this candle, I would have been out. So probably with this candle. You've doubled your money. You've actually more than doubled your money in no time by spotting this trap. This is a beautiful way to spot traps. Let's see, I have some questions. Jose says, yes, but it could be a bounce also. So how do you know? Well, Jose, that's a fantastic question. Okay, cool. So yes, there could be a bounce above here as well, right? Yes, nobody knows. I don't know. I mean, maybe we go hunt for these imbalances candles. You got to remember, the market makers have to make the markets go down. The trend is bearish. They don't have to make the markets go down, but ideally, the trend is bearish and the shorts aren't stepping in. Neither are the bulls. I mean, shorts aren't closing out their position. Neither are the bulls. We're just having dull, mundane movements with little to no volume whatsoever. Okay, cool, fantastic. So once we make that new high, we know very well that we should not be back in this zone at all. That is where I want to look for some sort of entries. So as soon as we make that new high, we should bounce off of this level. Maybe a retracement, a little tiny bit, sure, acceptable. However, if we don't hold the only single candle that came in as a buyer candle, then clearly something's wrong. We are attracting those new bears. You got to think people will flow with the trend. If this trend breaks, if this, let's say this was a double bottom instead of a bear flag, and let's say today was a not so crazy day out there in the markets, if this trend breaks, the likelihood of you going with the trend and a million others going with the trend are much higher than them going counter trend. First of all, lots of bulls have been trapped anyway from this move. And so the odds of it going higher are very, very low in this scenario. We did have a bearish engulfing candle right over here, and that should be your cue, my friend. That is where you look for those short setups. Great. You are not confident. You are still afraid. You're still second guessing. However, if you see a retest of this candle and we don't take this candle out the very next minute or the very next 3 minutes, there is a problem. Go short that candle. The retest of this candle is this is kind of sort of like us putting our entries much higher for a short compared to us finding a setup somewhere after the bear flag is broken, which would be ideally here, which is not much of a difference technically, but we would get a much better risk to reward when you can spot this early on. And here you go, take your target at the new low. There's a reason why this candle is super large right over here. Everybody is taking targets, and well, we didn't really have any of the buying come in today. Today there's been very little buying coming in, but that's your perfect way to spot traps. Yep. So Jose says, I need to pay attention to us rolling down. Yeah, absolutely. Okay. Now you may think, well, this doesn't really, this doesn't apply to bigger time frames. It applies to smaller. This is how I use it in my scalping technique. So this is how I use it in my 1 minute chart, my 3 minute chart. I promise you guys, this happens every single day. I can't really find a bull scenario. Today is just a massive bear day, so can't really find a bullish scenario. But here's another beautiful one. Let me take these numbers off, and here is on the 1 minute chart. We've convinced everybody and their mom that we've made that low, somewhat of a low, and now we're going higher. We have these upper shadows in those wicks, and you're sitting there thinking, well, maybe it's just a retest. Fantastic. Okay, cool. However, no reason we should take this guy out with this much of volume. So let's say you put on a trade on the retest of this candle. This guy got a bigger retest. So let's say we put in a trade on something like this. Right over here, there goes our stop, and our target is the new low. which would probably be somewhere over here. This is an easy 1R kind of trade, 1.2R kind of trade. Granted, you get out at your targets. I'm somebody that loves taking all at targets. If you were trailing stops, I mean, today there's no stopping it, right? You would have made lots of money if you were trailing stops, or if you were just being patient and letting it run to massive new lows. That's 15 times the money you were risking up here. Again, not saying that you would get these trades every single day with 15 times your money, but if you know and have the art of spotting these traps, that's how you make life-changing money. That's how you make those trades with bigger, massive R's. You might have heard somebody, well, I know one of our RLT member, Woodshed, likes to, so yesterday he mentioned, I will be shorting RTY. And here is our hourly chart, and we are just going to ignore everything that happened over here today. He mentioned it in the chat room yesterday, on our live trading rooms, that he was going to be shorting RTY. Anyone would have said, well, we're making higher highs. We're taking this pivot out. Why are you shorting over here? And here's your answer. We're making those higher highs. If we do not hold, do you guys want to guess where his stop was? Maybe 20 points higher. And his entry was somewhere down here, somewhere in here yesterday, which is phenomenal. I mean, look at the risk to reward at this point that he gets. How do you think he came up with that? Here's our imbalance candle. The market makers either have to hunt for stops for us to go lower, or an imbalance candle. Here's our imbalance candle. He spotted it. Ideally, I would have liked it to go all the way up to here, but it didn't really do that. And we were somewhat extended. Well, that's how he came up with that trap, by the way. And he did phenomenally well. I hope he's still holding. I'm not sure if you are or not, Woodshed, but Jose says that was my plan. Yeah, it's here's how. Again, you may think this doesn't happen on larger time frames, or maybe I'm just making this up and it doesn't really always work out. Jose, where do you think the bulls got trapped on this chart in this scenario? Do you think it would have been on this day right over here on 29th March? Those hammers, February 2, absolutely. We made a higher high, trapped all, well, technically, witch hunted the bear stops, trapped some bulls, and then the smart money stepped in, continued the sell-off. Where do you take all? At the new low. Could have been this day, could have been this day. If you were patient, could have been this day. I mean, this is the daily charts. You have to be careful. You have to give it some time. But here you go. This is a prime example. I don't know if you guys remember, Jeremy called the precise high on the Qs over here on this day. How do you think he got that? Stop hunting and imbalance right over here. We got that candle right here. And if for whatever reason we took this candle out and did not hold, this was slipping, definitely slipping. Here we go. Shouldn't have taken this candle out. We got this gap down. Buy all the puts, you guys, all the puts you can find, because this is a perfect storm for a perfect meltdown. Even if Jerome Powell with his speech wouldn't have helped it, I would have still been in this trade, and it would have taken us a little bit longer comparatively than, you know, this quick drop within the next few weeks. But this is your way to spot traps. If we hold this and go higher, what do you think your risk to reward is in this scenario? Let's say you get in on these puts right over here on the daily candle. and we're going to go for the new low right down here. Now, again, I'm not saying this is going to happen today or tomorrow or anytime soon. This is a daily chart, but let's say this scenario failed you and then it went against you. Your stop comparatively is so much closer to your entry price, especially if you're doing this with puts, long-term puts expiration. Well, you knew immediately you were wrong and you got stopped out for a much smaller loss compared to what you can make eventually if you spotted the right trap. That, my friends, is pro level trading. This is what advanced traders look for. Let's go see if we can find something on the cues today. So I prefer to trade NQ, but if anybody likes to trade the Qs, the QQQ, you can certainly take this trade with me. I want to see if we can find maybe a trapping candle. Well, it's 4 o'clock. Never mind. Okay, cool. We're not gonna find any trades right now, but let's see if we can plan out some scenarios in this case. Steve says, now I'm a happy panda. Gregory Hill says, yesterday afternoon was just irrational buying. Yes, absolutely. All right, guys. So with that, we're going to wrap up our trap video. This is how you spot traps and get those bigger risk to reward trades. Constantly, this happens every single day. I challenge you to go find these and through back trading, or if you are if you're watching out for these specifically, definitely give this strategy a shot. Definitely rewatch this video if it's confusing, and if you still don't get it, please feel free to reach out to me at Miloni@reallifetrading.com. All right, thank you guys.